money is the least important thing.
This is Vincent, a former entrepreneur who's currently general partner at Sky9 Capital, a $2 billion investment firm that invests across numerous industries. Starting a venture is the ambition of today's generation, but it's incredibly hard. It takes more dedication, failures, and resources than most can bring up. We talked to Vincent about general advice for Web3 founders that are trying to raise funds and why the bear market, after all, isn't the worst time to raise. It may sound inconsistent, but successful fundraising isn't so much only about raising money, but more about creating meaningful connections.
Right now, there are so many venture capitals, there are so much money. So as long as your idea is interesting, you can always find money. You need to find the VCs who are really helpful. Being helpful means that they give you support, no matter it's resources, no matter it's their time. They spend time with you to brainstorming the strategy, the roadmap. If you got some problems in the product or in the business side, they can help you to lend a hand to solve the issue. So those are the investors you really want to have on your cap table.
Vincent explains that it's about finding partners that understand and believe in what you're trying to achieve. They will give you that outside perspective that's highly needed when you're heads down working on your product. And bear markets may just be the time to create those meaningful connections.
Like in the bull market, everyone formed into some hot sectors. But in the bear market, it's a different story. The fundraising process typically take much longer, like maybe 2 or 3 months or even longer. So the VCs, they can take a breath and really look into the deal.
Seth Godin said it best.
And in a world where we have too many choices and too little time, the obvious thing to do is just ignore stuff.
Adding up on this, bear markets present an opportunity. There's more time to get acquainted and less noise. But if your future investors do have the time to listen but are still not convinced, this is also not getting you very far. So how do you stand out?
We do look at the team, the product, the roadmap, etc., those kind of stuff. But in reality, I think it's actually case by case. So if there is nothing interesting or it's just like another deck among dozens of similar projects in the same vertical doing the same stuff, so you probably won't be super excited. But if there is something interesting, it could be a feature of the product, it could be the solution to the problem, it could be a superstar team, right? As long as there are something differentiate yourself, you want to figure out whether this team can really deliver what they want to achieve.
How's the communication amongst VCs in this process?
Most of the times there are some deals we feel interesting, but we definitely want to have some other peers we are kind of familiar with each other to get a second opinion from the others. The relationship between VCs are very I would say complicated. Sometimes we are competing with each other. Sometimes we are trying to be really good friends. Yeah, that is how it goes,
This episode is brought to you by Lens Protocol. Lens Protocol is a Web3 social graph designed to empower creators with full ownership and control over their content and community. Lens isn't a social media app. It's a protocol that lets Web3 social apps thrive through its open source tech stack. When you create content on Lens, you own it. You control it, you take it from app to app, and you decide how it's being monetized. While Lens might just be the last social media handle you will ever need to create. Finding a match is one thing, putting a price tag on is another. Valuations tend to be less favorable in bear markets, so what is the best strategy to negotiate fair terms?
Many of the top companies, they are born in the bear market. A few things you can do is that you can compare with your competitors in the same stage, how much money they raised, what is their valuation. Maybe they raise at 50 million or 20 million. That might be a standard you can as a start to pitch with the VCs. But at the end of the day, it's more about the negotiation with the VCs. So in the bull market, if you can raise a lot of money to have more capital and resource than your competitors, then just do it. But if you are in a bear market, and valuation is just the second priority.
Starting a venture is hard, harder than most will tell you.
No matter it's investors or the founders, no one can really, time the market.
But bear markets might just be the time to find those partners that outlast any term sheet and pull you through it.